We're sitting here looking at the sea and getting ready to talk with Paul Little, the president of EQECAT, who has been doing a lot of interesting things with catastrophe models, and we're going to hear about some of them. And Paul, you've been president now almost a year, right?
It's actually been a half a year.
It's only a half a year. In that half a year, what are some of the problems that you've seen and some of the things you've been doing?
Well, the half a year, it was actually preceded by 2.5 years as Senior Vice President of Sales.
Okay.
And in those 2.5 years, I participated in the transformation plan for EQECAT. That transformation plan was really developed with the benefit of the investment of our parent company, American Bureau of Shipping.
Okay.
They saw an opportunity for our firm to come out with the next generation of models. And the next generation of models is really built on a platform that we've had for the last 20 years. In fact, next year will be our 20th anniversary as a company.
Yeah, EQECAT, not really the first, but one of the first, wasn't it?
Yes.
Yeah. And you've just come out with that new model. What are the features? What are the differences from the older style of catastrophe models?
Well, the main thing that we focused on when we created RQE, Risk Quantification and Engineering, is maintaining the science and engineering that underpins the model. What we did as part of the investment is look at the front end of the model, the user interface, and that's the part of the model that a client sees when they're using it. And in that functionality, we made it a lot more flexible and a lot more easy to use. We created templates, so that regardless of the type of data that a client has in terms of its format, we can bring that data into our model very easily, okay. And it really reflects the nature of the risk that's being taken on. And then on the back end, which is the output, we actually changed and improved our financial model. It was done with consultation with our clients. We actually formed a client advisory board, and that was made up of insurance brokers, reinsurers, insurers, and even 1 or 2 players in the ILS space, which has become so prominent today. And their input informed all of the functionality and the output that we've included in RQE.
Okay. Alternative capital, of course, is a big thing at this conference. Do you do models for ILS transactions, cat bonds, collateralized insurance, that sort of stuff?
Yes, we do. We act as calculation agent for the issuance of a cat bond. In fact, EQECAT was one of the first companies to issue a bond based on a parametric trigger.
Okay.
Normally, an insurance contract is on the indemnity, the actual loss of a company, and a parametric bond is actually based on the characteristics of the event, the wind speed of a hurricane or the magnitude of an earthquake.
Okay, so can you explain a little more how that works? Because I know the term, but just how it works, parametric triggers.
Well, when an event occurs, it can be based on the characteristics of the actual physical hazard itself, the peril. So if you have a hurricane as an example, you can design a contract that what triggers the payment of the contract is the wind speed of the actual event. So if you have a force 5 hurricane that's typically between 140, 155 miles per hour wind, you can actually have an insurance contract that pays in the event that the wind gets into that level. That's in 140, 150 mile an hour wind speed. That's an example of a parametric trigger, or a similar thing with an earthquake. You can actually design a contract that responds if an earthquake of a given magnitude occurs.
Okay. They're also used for like agricultural insurance too, aren't they, for rain and hail and stuff like that?
Yes, those are usually characterized in degree days, depending on heating and cooling degree days, and that would be the trigger, the parametric trigger.
Okay, it's an interesting concept. Why do they do it that way?
Well, there are a number of reasons why that's done. Sometimes the underlying data is not sufficient enough to really characterize the peril in a manner that an investor wants to be comfortable that they understand the risk. And to the extent that the thing that's being measured, there are wind stations that are measuring, or the USGS that's measuring the magnitude of an earthquake, that's kind of an independent measuring statistic that can't be influenced that much by, in the event of like an indemnity contract, where it's based on the amount of loss an insurance company suffers. The amount of loss a company actually has can be determined a lot by their claims handling practices. Mm-hmm. So to the extent that they're liberal in their claims handling practices, which would be beneficial to their policyholders, they might have a much larger loss than they otherwise would if they were to settle those claims in a different manner. So you now have an independent factor which is being used as the basis for the triggering of that event, and investors actually like that.
Yeah, I would think they would. Yeah,
mm-hmm.
It's a very good concept. What's in the works for the future at EQECAT? What are you working on right now?
Well, we did just release risk quantification and engineering, as I mentioned, a 3-year effort. And right now we're focused on the deployment of that model with our existing client base. And we're about 80% deployed. It was released, the new model, in January of this year. And over the last several months, we've been installing the software, doing a lot of change management, comparing the old model, or the former model, I should say, mm-hmm. to RQE. And we actually have 180 country peril models. So that effort really includes all across the globe, from Japan earthquake to U.S. earthquake, U.S. wind, and also in Latin America, South America, and in Africa.
Okay. Most of the catastrophe models really are in the property field, and there's talk, at least I've heard some, that models are expanding into casualty and into other lines. Do you see any future in that?
Oh, there's been many models actually that have been used, certainly in mortality. There have been mortality bonds that have been issued, and there have been certainly models on the life side, certainly as I mentioned in mortality. And we think that there will be some bonds that may be issued at some point in the future that could be on the basis of terrorism risk or man-made disasters such as that.
Okay, but casualty really it's too long-tailed to really do a model for it?
There's been talk, there was an article written early this year that was describing all of the characteristics that are required in order to build a model for casualty business that actually could be used for the placement of a bond. Mm-hmm. So even though it's a long tail line, you can in fact develop distributions, and that's really the combination of looking at historical losses and running simulations to see what are the likely outcomes. And the things that are within control are the things that you would use for the basis of designing a bond or any sort of financial instrument similar to a reinsurance contract for casualty business.
Okay. And that's not actually happening, but that's something that people are working on, right?
Yes, they're working on that, as you suggest earlier. There are a number of companies that are looking for diversification of risk. They have maybe in some instances enough hurricane risk in terms of Florida hurricane. They know there's a demand for Japanese earthquake or typhoon, and those in some instances can be correlated. Or they may have enough of that risk that they're comfortable with and they're looking for other ways to deploy their capital. So therefore they're looking for something, another type of peril that's not correlated with what they already have in their portfolio.
Yeah, that would certainly make sense, I would think. You mentioned, as we were sitting down here, that you're working on a model that actually goes to individuals. Can you explain that a little bit?
Well, actually, it's not a model that we're working on.
Oh, okay.
When you mentioned the pace of change in the digital age and the handheld devices and how ubiquitous they've become and the way information is currently exchanged, I wrote a blog earlier this year that can be found on our website, EQECAT.com. And in that blog, I talked about the fact that as technology advances and individuals become more comfortable with accessing all sorts of analytics on their devices, and that's where they go for information, I could foresee a time in the not-too-distant future when an individual who is, let's say, looking at buying homeowners insurance or automobile insurance, but let's say homeowners insurance, they already buy automobile insurance essentially on the web. And you can go on your phone or on your iPad, whatever device, and get quotes and actually bind an automobile insurance. I think they'll be doing that certainly with homeowners insurance. And in fact, a CAT model can provide data, information that an individual can use with some education to determine whether or not the quote that they're receiving for that homeowners insurance policy is competitive enough given the likelihood of loss to their particular home.
Okay, and they can also, I guess, if you were going to buy a homeowner's policy, the insuring company would then be able to basically have an individual cat model for their potential client, right?
Well, they wouldn't necessarily have an individual cat model. They'll have access to the output. There'll be service providers, and there could be an app, and let's say an RQE app, as an example, and they would have that application. It would be not necessarily be an individual model that they would use and run the model, but they would have the output from the model in order to make an assessment and make a judgment as to what their risk is. And in fact, you can probably run simulations in this environment where you can look at, if I were to elevate my home a certain amount, if I were to put on shutters, what would be the impact, and how much credit should I be given on my premium as a result of taking these mitigation measures.
Okay, that's an absolutely fascinating concept. Where else do you see the use of cat models in the future? I mean, they have made marvelous improvements in them, and they're extremely useful. What else do you think they might be able to do?
Well, certainly we think that the U.S. government will be using models much more directly, and one of the ways they will be doing that is looking at the federal flood. Federal flood right now is a federal program that's in a significant deficit because of the rates that are being charged for individuals who live in areas that are exposed to flood. Mm-hmm. And when you have a major event occur, typically in the private insurance market, there is a adjustment to the pricing of that product, and there may be even a change in the terms and conditions in terms of what it covers to reflect the actual nature of the risk. That's not happening today in the federal flood program. I could envision a time in the not too distant future when the federal government might in fact employ catastrophe models to measure flood risk and therefore estimate the likelihood of loss and include that in the pricing of the federal flood product. And in fact, it may lead to the privatization of flood risk.
That's interesting. You see any possibility of that having for something like wildfires or earthquakes? They could use it there too, no, if the government's decided to get into that business.
Yes, they already exist. There are wildfire models. In fact, we have a wildfire model for California. And there's actually models that are used for forestry to the extent that you have hail for automobiles, typhoon models also exist. So there are already a number of perils, natural perils, that to the extent that we have data that it can be measured and that data is good quality, then we certainly can develop a model that reflects the nature of that peril, looking at the actual assets that are exposed to it, develop a likelihood of loss, and then estimate how much loss that might be for an individual structure, as also for the entire industry.
Yeah, fascinating. I suppose that catastrophe models will eventually be, or probably are now, just become an integral part of any kind of a reinsurance contract. I mean, you have to have it just fully integrated in there. Do you, I don't know, do you work with reinsurance companies? Because I know a number of them are reinsurance brokers. They do their own models. You basically, do they use yours also to like expand the knowledge, or how does that work?
Well, yes, an insurance company has the opportunity to license models themselves. They can also get the output from the models from their reinsurance brokers. So we would work with an insurance company directly, or we'd work with the reinsurance intermediary who would run the models and provide the output to their clients. Okay. And likewise with the reinsurer license CAT models, and they typically license at least 3 models. Sometimes they may be two models that have been licensed, as many as 3, I should say. Okay. And they want to have as complete a picture as possible, because each of the modeling companies have a different methodology that may be used, and to the extent that they have as many answers as possible, they'll have the best opportunity to reflect the nature of the peril and also price the products that they sell.
Okay. Last question. You're at the rendezvous here in Monte Carlo. What do you get out of it? Do you think it's really worthwhile attending this? Why are you here?
Well, I've been in the insurance and reinsurance business for 28 years. And during that time, I've developed a lot of relationships, as I mentioned, with insurers, reinsurers, as well as intermediaries. And most of my career was as a reinsurance intermediary. Mm-hmm. And this is an opportunity to really reconnect and see a lot of old faces and actually spend time with individuals, find out what's happening with their kids, their family, and actually individuals have moved from companies.
Yeah.
They've formed new companies. There's still a lot of entrepreneurism in our industry. So it's fascinating to see how the careers of my friends and colleagues have evolved over time. And also, as events happen, whether it's natural peril events or the influx of new capital, it's really interesting to hear the variety of perspectives on what the impact is likely to be, and then you have the opportunity to meet with rating agencies as well.
Sure.
And to the extent that you can complete your view of the industry by hearing all of those viewpoints firsthand, then you have the ability to, first of all, for EQECAT, inform our product roadmap as to what we see as the priorities going forward, where the need is, so that we can respond to that need. We have the opportunity to meet with our clients, and we understand how our model is being used, and then what can we do, the things that we can do differently or we can do to improve what we're doing today so that they can get greater value out of the model. And it's also just a beautiful place to, if you have a few minutes, to walk out on a balcony or to walk down Princess Grace Boulevard and just take in the sights of the Ferraris and Lamborghinis.
Oh, it is that. Paul, thank you very, very much.
Charlie, it's my pleasure.
Excellent interview.